Out of touch billionaire asshole praises inflation while Americans suffer. The Chinese real estate economy is collapsing. What is the next domino to fall? And naive retail investors continue to buy the dip regardless of warning signs. Alright. The experts at Wall Street and the government told us that we will experience a V-shaped recovery and a period of economic boom. The Roaring Twenties, as they like to say. Perhaps by the Roaring Twenties they mean the Great Depression, because the V-shaped fantasy is falling apart, as most economies around the world continue to struggle to climb above the previous GDP forecasts. Matter of fact, here in the US, the Atlanta Fed downgraded its GDP forecast to only half a percentage point for the third quarter, down from over 6% a while ago. It is clear that the economy is falling apart as reckless monetary policies around the world produced inflation that is crippling the standard of living. They told us it would be transitory, and now it is evident that these zombies don't have the slightest clue as inflation ravages the global economy, surging beyond so-called expectations. Matter of fact, the Producer Price Index in Germany surged to the highest level in 50 years. However, on the bright side, perhaps the German population is nostalgic to the good old days of the Weimar Republic. Corporations continue to sound the alarm about inflation, warning consumers that prices will go higher. For example, yesterday, Procter & Gamble stated that they will increase prices on consumer goods, and today, consumer staple giant Nestle also indicated that they will hike prices across the board, from snacks to coffee to baby formula. Here, in the United States, inflation is approaching a tipping point, impacting grocery stores' items with higher prices and massive shortages ahead of the very important holiday season. Poor and middle-class Americans will have to adjust their holidays plans, if not forgo them altogether. Between prices surging out of whack and extreme shortages, families are expected to have fewer gifts under the Christmas tree this year, and children will have fewer reasons to experience joy this season. Even juice boxes and Kool-Aid are disappearing from store shelves, but luckily we can still drink the Kool-Aid from our beloved media and dear politicians, who continue to assure us that this historic crisis at our ports with hundreds of cargo ships waiting to dock is just a sign of a thriving economy. A thriving economy where the poor and middle class are choked with higher rent, higher food costs, higher energy bills, higher clothing prices due to cotton prices surging out of control. Even airline tickets are getting more expensive by the day, keeping families from uniting together this holiday season. This is an unprecedented crisis, a manufactured crisis by reckless policies by the Federal Reserve and the federal government. This crisis could have been avoided had our so-called leaders placed the livelihood of average Americans ahead of stock and real estate market gains for the rich and the ruling class in this country. And this crisis is getting worse by the day. Matter of fact, the White House is now wading in, sending the National Guard to alleviate the crisis at our ports, as the labor shortage in truckers continue to cripple the supply chain. On top of that, draconian jab mandates are also contributing to essential workers quitting, from nurses to teachers to cops, adding more fuel to the fire of inflation. Matter of fact, the Federal Reserve in its beige book today admitted that labor and supply chain shortages are cramping the U.S. economy. This is, of course, the same Federal Reserve that is laced in scandals, as multiple Fed officials, including the Fed chairman himself, got caught insider trading and enriching themselves with the reckless monetary policies that they have enacted. Even this delusional reptilian creature we call the Treasury Secretary said today that she still expects the U.S. economy to return to full employment next year. And I say I'm still expecting my high school crush to call me, even though she is now a Florida mom with a meth habit. Likewise, the brainless Secretary of Commerce today continued to gaslight us by saying that the supply chain crisis is due to COVID and not their reckless policies that stoked excessive demand from the very few winners in this economy, while leaving the majority of Americans behind, losing their income, savings, and the hope of a prosperous future. Adding insult to injury, greedy mummy billionaire Nelson Peltz, who's 80 years old and already has 1 foot on the grave. But how much is enough, right, Mr. Peltz? Gotta gobble more money before you get in the grave. God forbid you go in the grave without your money, because you're gonna need it there, right? Perhaps you can bribe God for some mercy. But anyhow, mummy billionaire Nelson Peltz, in an interview with CNBC today, said that inflation is good for the economy.
10 years, who would have thought, Scotty?
I'll tell you what, I wouldn't have, but it's great to be here, and it's great to have you with us. You know, Jim Cramer and the gang are here as well. What a day. I mean, you know, new closing highs, Nelson, on a day where you've got Paul Tudor Jones and David Einhorn on the network talking about inflation. How do you see things?
Look, I think we've got inflation, clearly, but the inflation is a lot of people making more money. And I'm not just talking about guys like me and the guests on your show. I'm talking about the average Joe whose wages have gone up as a result of COVID, as a result of the scarcity. And I think that's a good thing.
Yes.
I think the fact that they have more money to spend, the big thing is to get them to go back to work. And the fact that they have more money to spend, they're going to buy a little bit more Wendy's. They're going to buy some snacks from Mondelez. They're going to buy their toothpaste from P&G. And on and on. They're going to spend some extra money invested in Invesco. So I think that's all good for the economy.
And listen to the tone of how they speak about us, the working class. They refer to us as they, and how they should go back to work in corporate slavery with starvation wages to make them richer. Greedy billionaires like Peltz enjoy inflation since it makes him and his billionaire buddies richer, and they view the crumbs passed down on us as an opportunity, since consumers spend the crumbs to buy goods and services from the very same businesses these billionaires are already invested in. In the same interview, Peltz says that he does not understand the pessimism on the economy because he sees his spoiled brat kids and their friends doing just fine. They're happy, they're enjoying life. They're optimistic. Wow, billionaire spoiled brat kids are happy and optimistic about everything. And this is, of course, keeping Mr. Peltz also optimistic about the economy. How could he not when this economy is rigged in his favor? But perhaps the most disturbing revelation from the interview is his admission that he talks to West Virginia Senator Joe Manchin pretty much every day, instructing him on how to vote.
Senator Joe Manchin seems to be one of, if not the most powerful person in Washington these days, with all due respect, of course, to the President of the United States. Is that how you see it?
You are 100% right. Joe is the most important guy in D.C.
Yes.
Maybe the most important guy in America today. He is keeping our elected officials somewhere in the middle. And anywhere center-right to center-left works for me. It worked forever in this country until we had these elected officials who started pushing us to the extremes where it doesn't work, where it's uncomfortable. This is still capitalism. It's not socialism. Okay, this is still a meritocracy, and we better keep it that way.
We have a sitting U.S. Senator standing on the top of his yacht with a glass of champagne looking down at average Americans while receiving instructions from a billionaire who seeks to receive more stolen money from the next generation of Americans and pay little to no taxes. Folks, this is no longer capitalism, by the way. This is gangsterism. We have a rigged economy where the central bank of the world, the Federal Reserve, is printing money out of thin air on steroids, racking on trillions and trillions of dollars in public debt for the next generation to deal with, all to enrich these greedy old assholes or already billionaires. They're using this printed money out of thin air, this yayo, this drug, to stimulate the stock market and the real estate market to make these rich folks richer and richer and richer, while stoking inflation higher and higher and higher, punishing the poor and the middle class. No, this is not capitalism. This is gangsterism. Moving on to the next story, perhaps the communists have it better. Not really, because while the Chinese government assures us that the Evergrande crisis is controllable. So was Chernobyl, by the way. We are getting more evidence that the dominoes are falling apart in the Chinese real estate market as more developers default and Chinese homes prices fall for the first time in 6 years. Chinese real estate developers are struggling to pay their debt obligations and on the verge of collapse. Matter of fact, Chinese developer Sinic Holdings already collapsed and defaulted on its debt as shares of the company tumbled and lost over 90% of its value. The biggest bomb in this fiasco is Evergrande, of course, which by all indicators is also facing an imminent collapse, as deals to sell pieces of the company collapse. But rest assured, folks, everything is under control here. This is not Lehman. Rest assured, you don't have to worry. Put your blindfold on and continue to buy. Speaking of buy, with all of these crises on the horizon, investor sentiment is souring, at least among institutional investors. Money flow is shifting from growth and easy money sectors of the market, such as tech, bonds, and emerging markets, to inflation hedges in energy, cash, banks, and commodities. Matter of fact, both the energy and bank ETFs are now outperforming the S&P 500. This is not a good sign, and every time we see banks and energy outperforming, this is usually precedes an imminent collapse of the economy, just like we saw back in 2007, 2008. Energy and banks outperformed. This is the last stage of the bull market. In yet another sign of concern, the U.S. Junk Bond High Yield Index is no longer outperforming U.S. leveraged loans, in yet another indicator of the cautious and defensive formation in the market from institutions. Yet retail investors continue to buy the dip in tech and the riskiest corners of the market, believing that the Fed has their backs. Better than expected earnings may be driving some of the market's gains, but retail traders, those who buy and sell on popular platforms like Robinhood and TD Ameritrade, have also been buying up stocks, even as shortages and problems in the supply chain threaten to leave corporate earnings lower than investors expect. Institutional fund managers don't seem to have been riding the market higher as aggressively as they sometimes do. In October, the average cash holding of fund managers that Bank of America surveyed was 4.7% of their total portfolios, up from 4.3% in the prior reading, meaning that these institutional fund managers are raising more cash. They're being more cautious. Inflation is getting out of control. Shortages are out of control. Margins are getting squeezed. The labor shortage is getting worse. Wage inflation is getting worse. But hey, this is a great time to buy stocks, right? We'll see. Anyhow, folks, these are the headlines of the day. Thank you for watching, thank you for listening, and good night.